Yo, what up everyone? In this video, I want to review the past 2 days. I want to review a trade that I took, some trades that we took in my Discord community, along with some lessons that we could take out of this action to prepare ourselves for better trades in the future. There's some really good lessons based off of these current conditions that are applicable to any market that we could get some good guideline and a good basis or foundation for trades that we could look to take in the future. Before we get into it though, I recommend following me on Instagram at Ameritrade. I'm going to link this in the description below. I post daily trading recaps on here along with very good trading tips and tricks that I guarantee you're not going to find anywhere else. Link is in the description below. You're definitely missing out if you're not following it. But now let's get right into the lesson. First thing I want to go over is Monday's action, October 11th. We had the S&P 500 from the pre-market plan. I post these every single day in the Discord of the levels I'm watching, the zones I'm looking to trade based off of, and some overall market context, which is key. So I said, in my opinion, we need to practice patience. We need a little more development and context. I would like a pullback into demand, as you can see down here, 4344. And we had supply that I wasn't a huge fan of. Once above this, we didn't have any supply until 4411. I said, for more upside, I'm open to playing calls into 4411 once we are above the 4385 area, as long as new demand forms. So the lesson I want you all to take out of here, let's just see what it looked like before the market opened. We had this supply zone that we were rejecting. We had demand above, and then we had supply above right here. So once above this supply zone, there really wasn't much stopping us from rallying into a 4411 supply zone, which actually is not marked in this area right over here. So I wanted to gauge how participants reacted to the 4377 supply zone. I made a video about this last week about how the current conditions, things have changed. And I've been using zones more as an area to gauge context and gauge the participation in the market. Meaning if we come into a supply zone, this normally means an area that I look to take the market short. I'm open to it as long as we have selling pressure and sellers confirm the move to play puts inside of supply. However, if we act like supply is not there, we void it, I invalidate it, or we create demand above or slice through it, indicating buyers are stronger than sellers, or just sellers gave up, then I'm interested in playing calls or getting long inside of supply. I'm also going to make an Instagram post about this, so be sure to follow it. So from the pre-market plan, that's why I was open once above 4385 to play calls, because we really had nothing stopping us from rallying into this 4410, 4411 area that I marked as a green line there. So the market opened up, and this is where the emotions get the best of you. You know, you plan. If you don't understand context, you don't understand adapting and reacting to the market, you're going to see a pink supply zone, and you're going to think, oh, I need to take the market short right here. This is where the market can possibly reject. Part of that is true. However, in the current market, like I just said, I've been using it to gauge the auction. This is where a valid trade was put on. We could have got long, and I know some members also took this trade. When we came into supply, we wedged out, we consolidated, we were forming new demand. Buyers found value inside of supply. The same applies to the downside with demand. We could look to take the market short as long as sellers are more aggressive than those passive buyers. In this case, those passive sellers were weaker than those aggressive buyers. As we consolidated, buyers found value inside of supply. This is why it's very key to gauge the auction of the market. It tells you a lot. And when you get this information, you get this development, that's when you can take a high quality trade based off of what the market is currently telling you, based off of price and volume. It's very key, it's very powerful, and it's a serious edge in itself. So then we started breaking out, volume started increasing. This could have been an entry, or you could have waited if you missed that to get a long above 4385, where it actually acted as resistance, and then we continue to rally on the way up. Now, this is also something where it comes with intuition and feel. Let me just relabel this as the supply zone at 4411, supply imbalance. So this is where intuition and feel comes into play, meaning this rally felt very superficial. It felt not organic. meaning it felt like the passive sellers just weren't there and buyers really weren't too aggressive. We were just consistently moving up, making higher highs, making higher lows. And I recognized this. It just felt a little superficial. It didn't feel like a real auction. And this is where you could capitalize on where it, from my opinion, after analyzing this chart, reviewing it after the fact, it's acceptable to play calls or play a bullish position and chase something where the risk to reward doesn't make sense. I'm all for going with proper risk to reward, and I wouldn't want to chase an extended move. For example, let's just say up here. But something about these pullbacks kept getting bought up, and it just seemed like nothing was stopping the market from moving up. And it's acceptable to skew your risk to reward a little bit. It's a little bit of a higher quality of a trade, and we missed this supply zone by about 4 points. I wish we hit it, but you have to take your profits inside of strength, maybe volume surges, maybe something where the premiums are a little inflated so you get a good bang for your buck. And then this is where FOMO hours become initiated, meaning after you miss the first rally, you're like, oh, I could have made $3,000. Oh, I could have made $6,000 on this trade. I missed out on it. Now you're going to have FOMO. You're going to be like, oh, I want to make some money. I want to capitalize on an opportunity. When after the first hour, if you look at volume, it completely decreased. And there really wasn't any opportunity from 10:30, the first hour of the market on. And that's where your emotions are going to have the best of you. And we just hung out around here, consolidated, and then we did have an afternoon sell-off. And that superficial rally became validated from what I felt like because of all those buyers earlier, completely underwater by end of day. And we had a pretty nasty sell-off going into the close. Now, at the same time all this was happening, we had NQ breaking out. Now, if I pull up the pre-market plan on this, I said I'm interested in playing QQQ calls as long as buyers hold and defend the 14739 demand zone and the 14658 demand zone, which was very key. Pull back into it, buyers show up. I'm interested in playing calls. Market opened up, we sold off into the zone, and then we rallied. This is an area that you could look to get long. However, if you miss it, you could use the context that buyers are factored in. Context is king. Context is key. It gives you everything you need to know about the auction. We had buyers factored in here at demand. Let's just say you missed this morning rally. Let's just say you did not get long. Maybe you could have got long over here when we consolidated. We broke out of this flag and we continued going up. Equities were pretty strong. ES was pretty strong. And you had overall market validation, especially that once we got above the 1477 supply to pre-market high, that we're going to move or continue moving back up. So it's just reading the clues and adapting to what the market gives you. We came up, we created supply near the highs, and now this supported the ES sell-off as well. We created supply, we hit it not only once, we hit it twice. Supply and demand forms intraday. It gives you good signs of the auction and good signs of the context with participation that you could come up with a really high quality trade, hit it twice, and that's what fueled this pretty much all day sell-off after the first hour. Create a new supply on the way down, and this is going to be key for tomorrow's auction. So the key points I want you to take out of here is new zones form throughout the day. If you miss your move, look for something else now that buyers or sellers are factored in. Gauge the context. And what I've been seeing in this market, I normally would not have taken long at supply. However, I took the same exact trade last week. I think I made a video on it or I made a post on my Instagram about it. I took the same exact trade, looked identical to this. That's why this setup worked out so well. Because we consolidated inside of supply, found value with buyers, moved up, sellers were pretty weak. Same exact patterns repeat themselves in current or different conditions. The key as traders for us to survive is to react, adapt, and identify these opportunities and protect our risk at all times. And one thing I said in the Discord, which is very key, is the more development we have, the more information about the auction we get, the more context, the easier it is to read, and the easier it is to find a high quality trade, which results more profit. Process over profit. Don't just trade to make profits. Trade to follow your process, hit your setups, as that's what will bring the profits, and that's when the money will come. I don't wake up and say I'm going to make money today. Instead, I say I'm going to look for my setups and take high quality trades, as that's what's going to make me money. So now going over Tuesday's action, October 12th, I want to get into NQ. We had supply above that I said if we reject, we could sell off and capitalize on puts for a move back down into demand. We had demand at 14658, 14637, and we were rejecting the supply at 14782 and a half. Now this NQ action is very key because this is going to be key for the Tesla trade that I took today. However, we did reject supply. This gave us the context that sellers were factored in at the open. You could have easily capitalized on puts back into demand. And this gave us multiple opportunities to scalp calls at this imbalance. This indicates buyers were pretty weak today because every move at demand, they did not show any effort or did not get rewarded to the upside. And from a contextual auction standpoint, these were very weak buyers. And sellers weren't really too aggressive. It was kind of just an area that the market was like a vacuum sucking in as much liquidity as possible. So we started consolidating at this demand zone, gave us multiple opportunities, broke the low a day, hit this demand zone, and then bounced as well, and gave us another nice opportunity to play calls to the upside. And then by end of the day, we sold off, consolidated. But these are balancing conditions, and Trade members know this. We have to trade differently in balancing conditions at all times. If we were to look up the S&P 500, this opened up in no man's land, meaning in between supply, in between demand, and volume, 1.2 million lots compared to an average of 1.6 million lots. So very flat, we consolidated. If you trade this action, you could scalp, you could get a few points, but you're going to get chopped up and your emotions are going to make a lot of the decisions. And in my opinion, it's not worth the mental capital. So you really have to trade a little differently and conservatively, defensive in this type of market. But this skewed a trade that I took on Tesla. So I want to pull this chart up. Now this could have been a very, very good trade. I want to go over this pre-market plan. Said it's been playing games and in a very strange consolidation phase. But I'm interested in playing calls if you could build volume. Like I say in all my videos, volume is the most leading indicator. It tells you every single thing in relation to price about the market and about the auction. So I was interested if we could hold above 800. If we could do that and get above the 805.30 area, I'll be watching to pinpoint an entry intraday where my risk to reward makes sense. What I also liked about this was we did not really have any supply above, so this kind of had free range. The only problem about this setup was Tesla every single time it came into 800, 802, 803. We did something that Trade members know what I call as playing games. And in the market, I don't like playing games. I like playing when my setups hit. My setups don't hit when there's games being played. It's almost like a bad girlfriend. If she's playing games, you just dump her. So it was kind of like one of those scenarios where it's been playing games, and every time we come into this area, we just not been cooperating too well. So that kind of gave me a little bit of a red flag. That's the first type of analysis. The second type of analysis was a weak NQ. All day in the intraday commentary tab. Let's see if I can pull this up. I said Tesla's playing games. It needs to hold above 800, but I said that I need a strong NQ to support this setup. If NQ not being strong makes it less quality, and I didn't want to have a good trade turn into a bad one just because of weak market sentiment. So what I liked here was we sold off in the morning, we pulled back, and we reclaimed 800. That's its first intraday bullish sign. If you all know me, I like putting intraday clues together with overall larger time frame picture clues. Because when everything aligns, that's when I get my $1 million setup. And if you've seen that video, the $1 million setup pays like crazy. It's the setups that make me the most amount of money. So really was getting conflicting signals, but we started turning intraday into the bullish side. We started moving up. And then as soon as we came above 804, 804.50-ish, I played Tesla 810 calls. I think I got long at like 990 or something like that. And my exit plan was a stop loss below 800. So I was risking about 4 points, 3.5 points, maybe let's just call it, to make a potential of 6.5, 7 points around 810, give or take. Not the best risk to reward, which I could look back and I journaled in my notebook about how this trade risk to reward really wasn't in my favor and I probably could have avoided it. But then we got a quick push up and we started consolidating near 808. Now, if the market builds volume, you want to see increased interest from participants. You want to see effort from those participants bring us higher. So a red flag intraday, not really a red flag, maybe a yellow flag, was we were stalling out near 808. Not really a good sign. Plus NQ was pretty weak. This is why it's important to use market context with any type of equity trade you look to put on. So then we started pulling back and my risk was 800. I remember looking at my profit, which I put in my journal again. It's something I tell you all to avoid. It's not good to look at your P&L. But at one point I was up $2,600 right here. Started selling off. Now I'm down $6,000. I start freaking out a little bit. And my stop loss was still in play. I accepted it. I never deviate away from my stop loss plan. Ever. Unless the market gives me a red flag. Luckily, we start moving back up. And now I'm in profit. And I sell some at the 952 candle. Right into strength. As soon as we hit 810. Didn't want to play games with this at all. Now I have 80% of my position still open. In hopes for a continued move up. Because at this time that we bounced on Tesla, NQ bounced off a demand. So now I thought we were going to have continuation to the upside because NQ bounced off a demand. It was unfortunate that we had those weak buyers because this would have fueled a further move up on NQ or on Tesla because it was technically relatively stronger. We didn't get it. And then we moved back down and I sold the remaining contracts where I bought for about a break even. So a couple bad things with this was risk to reward didn't make sense. I got a little greedy. I should have got out a little earlier. I looked at my profit and loss, which affected my emotions subconsciously. Maybe I didn't really realize it too much, but it definitely did. So a lot of learning lessons with this. I'm happy with the result that came out. At least it wasn't a big loss. But then we consolidated and wedged. And exactly what I mean about playing games. We broke above the high. We failed. Volume spiked. And every time we moved up, we failed to continue moving up. That is a very big red flag if you're trading intraday and you don't want to get caught on the wrong side, especially when you trade options. The premiums are going to get destroyed. Tesla had 22,000 or 22 million shares traded today compared to an average of 18.6 million. So the volatility and the volume was there. It's just, it was playing games. And you have to recognize that. If you get a yellow flag, you get a red flag, and maybe everything's not really aligning, trade a little differently. Conform to the current market and do things that are going to work out, or maybe do something that you could avoid that if you knew you did, it's probably going to turn into a loss, if that makes sense. But I journaled this trade. I learned from all my trades. You know, I'm constantly improving. I never want to get stuck where I'm at. I'm always looking to increase my size, take better trades, try different things. So I put this in my journal. I review, I journal it, and I'm going to use this to build upon for future trades. Just don't let it play games. But I think on that note, I'm going to end the video. If you liked it, please just smash that like button, drop a comment. And if you truly want to learn more, check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord at no extra cost. But besides that, I'm ending it. Peace out.